Tell me about your passion for helping small businesses.
Well, it's more than about just providing them with capital.
Okay.
It's about helping them to understand what they have.
Welcome to another episode of Live the Grace Life. I'm your host, Corey Holman. And listen, I'm really excited because we have a special guest today. All month, we're going to be talking about business resources that are in our community that can help your business grow. And so I had to bring in the GOAT, Dr. Thelma Adams-Johnson. She's the CEO and president of Albany Community Together. She's been with them for 24 years. Please welcome Dr. Johnson.
Thank you. Thank you for having me, Corey.
My pleasure. My pleasure. So let's dive into this. Now, we were talking previously before we started this, why? What is your why? What got you started into Albany Community Together and helping small businesses grow?
Well, I had made the full circle. I worked for state government, local government, and then I came to work for the nonprofit after the flood of '94. To provide access to capital for small businesses that were affected by the flood. And while I was there, the president and CEO resigned, not immediately, but it was soon after, because the structure they had put into place was not working. It was mobilized by 4 local banks in the city of Albany. And when she left, the infrastructure was still there. And so we had a board in place, and I approached the board to reorganize what we know as ACT today. Yeah. So at that time, we were only serving the city of Albany, not the county. But today we serve 38 counties in Southwest and Central Georgia. But I'm a child of a small business owner, and at the time when I was growing up, I'm one of 13. And so instead of hiring administrative assistants, he would actually enlist one of his children.
Understood.
And when my oldest sister was no longer his administrative assistant, there's a 9-year gap between us. I was the one selected at that time. And so I spent many of my early years helping my father with his payroll, with his takeoffs, doing bidding. And I couldn't appreciate what he had at the time, because we were told he was a small business owner. Yeah. And that just brought a negative connotation. But, I've always lived my life trying to make up for what I didn't see as it could have been a legacy that was passed on to us. And we didn't know to appreciate it because of that one word, self-employed. And so I have a passion for helping those small business owners realize what they do have is more than just a small business. It's a legacy. It's something that can be passed on for generation to generation.
So to just kind of provide even more context into that self-employed, there are certain terms and certain seasons where they're not as respected, right? And so she was kind of sharing earlier about during that time frame, self-employed was looked down upon.
It was,
yeah.
And it was almost like if you were self-employed, then you have to ask the question, are you employable?
Yeah.
And people outside, and that's like we are today. We're influenced by society. We're influenced by what people say and how they take words and weaponize them. And self-employed was a word that was weaponized against my father. To us as his children, meaning that it was less than being employed. The go-to thing then, I guess, was to be employed by Miller's, Procter & Gamble, or something that had a name that you could relate to. But it was, if I often wonder if the word had been entrepreneur, how would we have responded? Or a small business owner. Yeah. Self-employed. He was really self-employed, but he hired additional people to work with him. So he was not just one person that was employed. He was actually operating a small business. Yeah. And he was using his children as employees within the structure. But we didn't know that. Yeah. And so I take what I've learned and from my professional training and experience through the years to help other small businesses learn and understand you got to get the back house and ready, being able to prepare to absorb capital, to grow, to scale your business. Yeah. And so he understood that, but I didn't at the time. Yeah. I guess I was too young and was influenced by community.
Absolutely. I get it. I think most of us that grew up with parents that had some small businesses, we didn't want to be a part of that business.
No.
We didn't want to do anything with it. It's like, it felt like a chore. And it's like, why? I don't want to do this, especially if you're not paying me. And it's like free labor, but.
And why not just do the easiest thing, go get yourself a job?
Exactly. It was a shift in thinking, and I think as we've gotten older, you shift. You start seeing things a little different. Not realizing that your father was creating something that could be passed on to you all. And I think a lot of times, just in general, in certain communities, that's not something we recognize until later. You see the work that your grandparents, your parents have put it into to try to leave something to you, and we sometimes just let it go. We just squander it. So that's just amazing. I was telling Dr. Johnson about, my father, he worked in construction and sort of handyman too, and he knows how to do anything.
Same.
But, I didn't necessarily want to, I'm sorry, Dad, I didn't want to continue that legacy. You're still doing it every now and then, but I didn't want to continue that. All right, so let's go into Albany Community Together, right? So you all have been in this community for 20 plus years.
That's correct.
We've seen the impact. We've seen how you're helping small businesses and mid-sized businesses as well be able to scale and expand. So tell me about your passion for helping small businesses.
Well, it's more than about just providing them with capital.
Okay.
It's about helping them to understand what they have. That you mentioned earlier in our pre-conversation, how you believe entrepreneurship is a way to break the back of poverty.
Yeah.
We actually see small business as a way to create wealth. You create assets, even with that small business, we have many that come to us that are not a homeowner. But once they grow and scale that business, they're able to create assets that they can actually use to grow the business.
Yeah.
They're creating collateral. They are creating assets that they can pass on from generation to generation. We just want them to understand that they can get affordable capital and business development services as they grow and scale their business to keep it as a asset-driven business, because we don't want to burden anyone with debt, right? So when we say we're creating wealth and helping businesses, we're doing it with affordable capital.
Yeah.
So our passion is not just to do loans, but to do it in such a way that it'll uplift the business.
I think that's so crucial, because I didn't realize, when I first started trying to get loans, the importance of having collateral. And I think a lot of times that's not something that's really discussed, and being able to like you can use your home as collateral. There are certain things that can be used, and I've even learned that when you have contracts, that can be a part of collateral as well. And so these are things that small business owners don't often think about before they arrive to your table.
That's correct.
And so let's talk about that. Like, what are some things that you believe that can help small businesses before they even come to Albany Community Together?
The first thing, going back to collateral, right? So when you're looking to do a loan, the first thing you should think about, how am I going to repay it?
Yeah.
And so in preparing to meet with that lender, always think about what are the revenues, what's the cash that I have to repay.
Yeah.
Cash is king. Collateral is our secondary source of repayment. We never want to get repaid from collateral, but collateral says to us that you're willing to risk it, and that means that you're devoted to the business.
Yeah.
But if you come to the table with no collateral, then you don't have any skin in the game, so to speak, unless you're putting some money down or bringing a considerable amount of equity.
Yeah.
And so we want them to be prepared financially, having to understand what they're making, how much money they're retaining in the business in the form of cash, what cash flow is available to repay the debt, and to understand their credit. And being able to provide those three financial statements, that balance sheet, that income statement, and that cash flow statement.
Yeah.
Just getting prepared administratively to apply for the loan. That's important, because if you come to us and we say, how much you want to borrow, and you say, oh, I think I need $50,000. But we want to see that you have a plan, and your goal is to ease the fear of the lender, because it's all about managing and hedging risk. Even though we're a public lender, there's a certain amount of risk that we're not willing to take. And so you have to help us be comfortable with that. And you also mentioned contracts.
Yeah.
And if you come with a contract and it's assignable, or we can see that the contract would be there to make the payment, that's an easy go. if the contract owner is willing to assign the contract.
Yeah.
So you just have to help us to get comfortable with the deal. And the other thing is to be truthful.
Yeah.
Truthful about credit, truthful about the business. We're building a relationship. So if you're coming in, that trust is going to build that relationship. And how long it takes to build that relationship is going to determine how long it takes you to get the loan. So relationships are built at the speed of trust. So when you are trusting and giving us the information, we're understanding that and we're building that relationship. And there may be some things that we would do that we otherwise wouldn't do because we're getting to know you.
That is so good. I think what you said is so crucial because a lot of business owners, they're embarrassed.
Yeah.
You're right. They come in embarrassed. They're coming in, especially money is a personal thing.
Very, very, very.
Right.
It's taboo
Credit,
in some communities.
Yes, it's taboo. It is. And so you feel very embarrassed when it's like, okay, well, maybe my credit's not the best, right?
Yeah.
I don't necessarily have all the financial backing or the contracts yet. And so I'm sharing this because I've been in that place. I still have moments, when I'm looking at my credit like, I like to have a 700, 800 credit, but there are times in the business where it's just,
it fluctuates.
It fluctuates. And so, but being truthful with that, I think what she said is so crucial is coming in when you sit down with her team, is just being honest, right? And the contract thing I want to mention too, because I learned that. And so I'm not trying to gatekeep over here. I'm trying to make sure that all of the information that I've learned and that the people that come on this podcast have learned is being shared to you because when I started, I said, no, I'm going to make sure everybody's on a contract. Even if I don't necessarily put it towards a loan, I have it so I can utilize it. So because they're looking at it this way, and you can dive into this more. Let's say your contract is $750 a month. Well, that's $9,000 a year that they can look at that they can use as collateral. So
or repayment on the principal and interest of a loan. If you're willing to pledge those contract dollars to the repayment of the loan, then that gets it one step closer.
Yeah.
And in our case, we can disallow the credit piece and the collateral piece because we have the repayment coming directly from the contract.
Yeah.
And so, just being honest and being open. Credit and money are hard conversations to have. Because credit is embarrassing because people feel like I've done something wrong.
Yeah.
Or I didn't make the best decisions. But understanding credit is deeper than that. You can make one mistake. You can have a 750 today.
Yep.
And you can have a 698 tomorrow.
Yep.
And things happen. Say if your car tears up. And we understand that. We're not looking at the credit score. We're looking at the credit behavior. So if your car tears up and it's $4,000 to get repaired and you have to put it on a credit card, in 2 days that 750 is going to go to a 6 something. Not because you're not paying your bills, it's because you used credit.
Yeah.
And lenders in the credit scoring model will frown upon using credit up to a certain percentage. And so if you was at 10% utilization and then that 4,000 puts you at 20% utilization, it's going to affect your score. Yeah. Credit is a moving target.
Yeah.
And so we don't look at the credit score, we look at the behavior.
That's good. So one of the things that I do want to emphasize is, so Albany Community Together, you are considered a community lending financial institution, right?
We're a community development.
I missed one. I knew it was one. I knew it was something in the acronym I was missing. Go ahead.
Community development financial institution.
Okay. So they're different from banks.
We are.
So tell us the difference between, okay, I'm going to a bank, but I'm going to you all. What's the difference?
We can help mitigate the risk the bank will take.
Okay.
Our money can come in as sometimes like equity because we can be very patient on the repayment terms. We're not regulated. We are certified by the Department of Treasury, but we're not regulated. Banks are regulated. So banks are forced to make sure that they have collateral, make sure that their loan fits certain regulation requirements. With us, we don't have to do that.
Yeah.
So we can even adjust our interest rates depending on what the bank is doing.
Okay.
So if you go to a bank and the bank says 100,000, and you're needing 100,000, and the bank may say, I can only do 50. You can look at us to fill that gap. We can structure it with the bank's loan to make sure that you can service the debt. We're going to do a global debt service. And so we're going to consider what you're paying to the bank, what you're paying to your other creditors to give you the best term to make sure it's the best for the business.
Okay, so very flexible there. I know some things that you're working on or you are doing is like this working capital, the flexible working capital.
That's
Let's
correct.
dive into that.
Okay, the working capital flex
Okay.
we've done because we had so many borrowers coming to us without collateral, without credit. You know, credit was that moving target. We look at it; it didn't have the number that 600 that we say we're going to cut off.
Yeah.
But we can look at the behavior and see that maybe they were running their business out of credit cards. And so that tells us that they do need working capital. And that working capital flex kind of takes credit and collateral off the table. And if you allow us to attach to your bank account for 2 years, you have to have 2 years of banking history for it to model a cash flow. And so what it's doing is using the Plaid platform, which most banks are using to access your account online. And we would get that data. It would model a cash flow statement, and it would tell us if you have enough cash flow after your expenses, after what you're deducting every month from your account to service a loan. It would actually give us an amount that you could service. And we can then make your loan, and the monies are then drawn from your bank account.
Okay, so you said 2 years.
2 years of bank history.
Okay.
At
So-
least.
At least. Okay. So they need to go ahead and start like the moment they start making
That's
any
correct.
money.
That's correct.
Okay. All right. That's good to know. And so just making sure that you're keeping track. And I think I'm gonna be real with y'all. I'm being honest and I'm being transparent. I didn't have a software system. I thought, okay, I could do this. And then I realized I'm not good with numbers. So I had to buy a software system. I use QuickBooks. Now, there are some cheaper options, which I'm looking into because QuickBooks is really getting expensive. But those help you because you don't have time until you can afford an accountant or someone that can manage your bookkeeping, which we do have now because Corey is not good at numbers. And I realized that quickly. So hire your weakness, right? That's what they tell you, hire your weakness. All right. I wanted to dive into what is maybe a story or a business that just makes you proud, right? That you were able to work with them, invest, the resources. Tell me a story that has hit you personally.
Well, there've been several.
Yeah.
That we had one guy. I'm gonna tell you, he just came back this time. He was an older, middle-aged man, trying to find that self-employed business entrepreneur, and he wanted a ice machine. And his first mistake he made, he rented land, and the land was not suitable for the ice machine, And so they gave him his money back. We had done the loan, and that was a learning experience for us too because they said he could do it. And then going through zoning and everything, we learned the process of an ice machine during helping him. And he always said, "I'm going to come back when I find the right location. I'm gonna come back. Will this opportunity be available? As long as the same things are in place, it will be available." When they sent him that money, he brought the check back to us and paid the loan off. And so he didn't owe anything because they got the ice machine back. And he came back this year, and he was able to get his ice machine. And so he's in business. And another business that we've helped, with technical assistance, helping them get a loan. This was years ago. I want to say about 2008. It was, and if you know what was happening in 2008, I'm not sure where you were.
Yeah, it was the recession. Yeah.
Correct. And it was two businesses that wanted to start in Albany. One was a Little Caesars franchise, and the other was Cinnabon.
Okay.
Yeah. And so at the time, we were managing the city's loan fund. That was a source of monies that we had to lend to these different businesses. The Cinnabon franchise was turned down because they said that he didn't have the traffic to support a Cinnabon franchise. So Mr. Ross would count traffic in the Albany Mall every day.
Yeah.
He counted that traffic to convince them to come to Albany to give him that franchise. And he opened in 2008. And on the other side, we were working with Little Caesars. Anthony King with his first location in Albany. He was fresh from college. He had $100,000. It was restaurant. No bank would do it. So he had $100,000. He was needing $100,000. We can match $100,000 with our $100,000. We did the loan for Mr. Ross, and we did the loan for sent him for Little Caesars. And the next quarter, after opening and getting his business up, Mr. Ross was the #1 franchise in the country
Wow.
with Cinnabon.
Wow.
Yeah. Yes,
In
that's
Albany.
correct. In
Wow.
Albany.
Come on.
In Albany.
I love that.
That was, and he stayed in that location as long as he could. And then
Yeah.
the economic conditions changed. He did expand. He's now operating his store in Columbus.
Okay.
Yeah. So he's left Albany.
Yeah.
But he did start another store in Columbus, and they're still open and doing quite well in Columbus.
Wow.
And that was 2008, years ago. So, and then with Little Caesars, we all know the story. He did another location in Albany, did another location in Tifton, and he's in Florida. And he has, the last time I talked to him, I think he told me about 7 or 8 locations.
Wow.
And he is doing extremely well. But it was one thing that really struck me about him, giving other people opportunities. He was hiring people that were former TANF recipients and bringing them in, and some were even being promoted to the level of managers. And he, was a ex-TANF recipient that opened a store in Tifton. And so, and he was a very keen on marketing. You would see his Little Caesars car around. It would have a ASU license plate. And I went to Florida, I would see Little Caesars. It had a FAMU license plate.
Yeah.
And that does something to a student. That it must be connected.
Yeah.
So that was marketing, branding. I'm gonna go in and get Little Caesars. It was only $5. I'm not sure what it is now. I think it's $5.50.
Maybe more than that. I'm not sure.
But those are some of the success stories that we have. We continue to make a difference every day. And we make sure that they understand the loan is an opportunity for them to get their business to a point where it can generate revenues and they can continue to expand if it's their desire. And sometimes it's not the desire of a small business to grow beyond one.
Imagine turning your business into a brand people can't stop talking about. Marketing that matters. The Entrepreneur's Guide to Growth and Success by Corey Holman. It's your blueprint for building unstoppable momentum. This book is packed with innovative ideas, action steps, and game-changing insights that you can use right now. Are you ready to disrupt your industry? Don't wait. Grab your copy now on Amazon and start dominating your market today.
So I love those stories, and I want to make it even more relatable to, let's talk about an entrepreneur. Maybe you have a story that didn't have a franchise. Like, this is their business, this is their vision from start, right? And you being able to impact them, because let's be real, everybody doesn't have $100,000 sitting, when I started my business, and I tell this story, I had $1,000. That's all I had. I had $1,000 to my name, and I prayed, and I wrote down the vision of what I wanted to accomplish, and I started January of that next year. So that's all I had on my name. Plus, I had a house, a wife, all this.
Okay.
So $1,000 to your name, that's not much, especially. I mean, you spend $1,000 a day, in this type of economy, but let's talk about that, like a story.
I'll talk about one, but I won't give his name because I didn't get permission for it.
Sure.
But it was he's a trucker.
Yeah.
And he came to us for a loan to purchase a truck, and he's done that, and he's now back at the table to purchase another truck. And so it's not a franchise, but he's creating what could become a franchise, or he could become an owner operator. Hiring on additional people. And it's like that, giving someone that opportunity that may not have been able to get it from the bank because that credit score was borderline. And we don't do that credit score. We look at it because credit is going to tell us the story of your life in business. If you come in and you say, well, my credit score is not that good. And when we pull that credit score, in his case, if we pull a credit score and it's not where it should be, we can look at the credit score and really tell what happened. And a lot of times businesses are using credit cards, or they're almost maxed out the credit cards, or they have a lot of personal loans that they've done to operate the business. And that's one thing that we try to educate our borrowers on. Always make sure you're operating from a business account. And we have another business that we've actually helped with their financials, trying to help them stay in that business. They've been in business way over 30 years. We provided them with a loan, with technical assistance to help them kind of weather COVID, because after COVID they lost a large size contract. And they're still operating, but we continue to be engaged with them to help them. So, whatever the story is, we have one to share.
Yeah.
And it makes you happy and feel good and proud that you're doing mission-driven work when you're able to help a person that is really operating a business and is the provider for their families and maybe other people in the community that are employees working with them.
Absolutely. I know that they're like every business is different. They're they're very complex in how they do business, right? They're from background to the financial, all of these different things that, especially when you add in an economy and just the uncertainty of things. How do you all help businesses navigate through that, right? Because things are ever changing. You talked about 2008, we had to go through a recession. We talked about 2020, COVID, how that helped. Well, it didn't help, but it shifted. It helped some people with the PP loan, but and then it helped some other people too. But the COVID kind of was another thing that shifts, and everything is it's uncertain. So how do you help businesses stay resilient, right?
Well, we do offer workshops and business development services to help them to understand the operations, to kind of do planning.
Okay.
It's almost like businesses have to do disaster planning. Like we as a nonprofit have to do what ifs, like we're in right now. What if federal funds don't come through?
Yeah.
What if foundational funds don't come through? What can you do to keep the business operating?
Yeah.
And I can tell you during COVID, we were given some funding that we had to answer that what if for our small business owners. And we knew restaurants were hit hard.
Yeah.
Beauty salons were hit hard because those are the businesses that were hands-on. And with COVID, we couldn't touch other people. We couldn't visit other people.
Yeah.
And so what were happening to those businesses, because they didn't have planning for the disaster that happened. And we received, I think it was $150,000. So we decided to give those small businesses that we knew that were interfacing with us prior to COVID, maybe for working capital, to give them $10,000 grants to help them to kind of weather that storm. And then after that, we stayed in contact with some to help them to address what happened. One, we were able to assist her in actually buying her commercial property. Being in control of your location was a big issue with COVID, because it determined when you came back to work, when you were able to open your doors. And if you're a hand-on intensive business, you had to be able to make that call. And so we were able to partner with a bank to be able for her to purchase her commercial property. And with the restaurant, we were able to, we were his small business resource provider, helping him navigate what was available to him through the disaster. How do I apply for funding? That's another thing. Of businesses that have been in business for over 30 years and don't have any family members working in the business, then those people are aged and they may need somebody to help with administrative. We've done that. We've applied, helped them, assist them in completing their applications to get the funding, along with our $10,000 to help, And I do have a story of a business that I know personally, because he opened the same year I started Albany State.
Oh, wow.
And so it was the restaurant, Shabazz.
Okay.
That's go over. If we didn't go to Maryland's, we went to get the fish special with the juice, Shabazz punch. And,
I know you talking about.
So
I know exactly what you're talking about.
And he's still in business.
Yeah.
And we've helped him, apply for disaster assistance, provided him with the disaster grant, and kind of talked with him about his business. Some of the things that he could do, some of the things that he can't do. Looking at the hours of operations. How do you stay in business? And he's been very receptive to that. And he's very risk averse, so he doesn't like borrowing monies. But he will take all the business development services that you would give for free.
And to be told, I was too. I had ran my business without loans. And sometimes I wish I didn't have to. I'm going to be honest with you. I wish I didn't have to, but I had to when I was expanding. But I did it. My business was just debt free for, up to 6 years. And then that 6th year I had to, I had to get something to expand to where we are today. And so I come from, it's just, it was a shift in thinking. So I get that. I get that. And now I'm here and now I'm making adjustments. But I'll say this. So we're talking about leaving legacies, right? The idea of building a business is possibly to pass it on, to be able to either sell it, because sometimes you want to build a business that can be sold. Not everybody has that opportunity. Right. But let's talk about that. Like, how do we help? Because we talked about this before we started, making sure if grandpa or uncle, started this business, that you're able to continue that legacy, pass it on, because we see let's just be real. We see a lot of communities, not necessarily, I wouldn't say ours, we're growing in that area, but making sure that we're passing down a legacy.
Right,
we're giving something to not start from scratch. Let's change that. Like, why do we need to start from scratch when something is already available to us?
We often see one generation of businesses in our communities.
Yeah.
And so what you mentioned earlier, you were trying to start your business debt free.
Yeah.
That's one of the things that we tell our businesses to not do.
Okay.
Save that internally generated cash to kind
Yeah.
of build reserves.
Okay.
And that's a part of your disaster planning. That's a part of the what happens. Always have reserves and to operate in case something happens. So if you're able to use someone else's money and they're going to charge you at a nominal rate, then take that expense and to grow that business.
Yeah.
Because you look at it not as debt, as an expense to operate a business. Because when I'm teaching about small business and I'm thinking about the transactions that happen, we always think what financial statement is going to impact. Saving your monies is going to impact your balance sheet, and that's going to tell the strength of the business. And then you borrowing money is also going to impact your balance sheet because you're going to buy an asset or you're going to save it somewhere.
Yeah.
And it's going to show that you have the ability to attract debt. And then it's going to hit your income statement as an expense. That's a part of operations. And so if you take the business mindset, how much is going to cost me to get the money, and in the form of the interest rate is the expense to operate. And so what we have to do early on is to teach our children and those family members that are operating in the business with us how to think, as a business owner, and how to move that business forward. Because it's not just to give a salary for right now, but it's to give wealth and generate assets that can be passed on from generations to generations. And not just operate a business, but to make sure that you're owning your commercial property. So how am I strengthening my balance sheet? And then to show that next generation, and not using the word self-employed, but entrepreneur, a small business owner, legacy business, because this is yours. You don't have to work in the business, but you can still own the business. You can hire employees, and then if you really want to get technical and get real spiritual about it, you're gonna be the head and not the tail. And so we got to start thinking about it from a different perspective. And I think when you own a business, there's nothing greater than creating your own and impacting your community and the lives of someone else through business ownership. And we have to let them know it's okay, it's cool to be a business owner. And to kind of teach them that it's not just a business that I'm sacrificing for you now, but that sacrifice is going to build something that you can be proud of, and it's going to be a legacy that you can continue. And you don't have to start, like you said, from the ground up. You already have it.
That's so good. I wish I had known that when I started. When I started, I honestly, when I started business, I wasn't expecting to go into business. Let me say that. Because I left my full-time job and I was praying, God, what's next? And so I had a vision for Grace Life Marketing, but I wasn't anticipating starting it that early,
But
right?
God did.
Yeah, he did, and here we are today. But so everybody's story is different. Your story is going to be not necessarily as mine. We're not always going to start off with 100,000. I wish I had started off with that, because I would be in a much greater place. But I'm grateful for the journey, right? And so the idea of this conversation is for those that are listening, for you to understand that this is a resource in our community. This is a partner for your business, for you to get connected to, so that you can go ahead and start that process. Even the simple fact that she said, go ahead and have those 2 years. So if you're just starting off, making sure you're having your balance sheets and you're keeping up with your financials. And if you can't find someone that can, because I am not good, so you may not be either. And then just think about this, because there's so much in business happening. You don't have time for everything. You just don't.
You don't.
You'll wear yourself out. But let me ask you this, and then we'll wrap this interview up. What's something that, like, whether it's encouragement, what's something that you want business owners to know from Albany Community Together, like your perspective?
Well, I want them to know that we're their business resource partner.
Okay.
If we don't have it and we don't have it in house, we can get you the answer. Just give us a call.
Yeah.
And don't be intimidated or afraid, because if it's happening to you, it probably has happened to someone else. And just make that first step. If you're in need of capital, access to coaching or connections, reach out to Albany Community Together.
Absolutely. All right. So Albany Community Together, you can visit them at albanycommunitytogether.com. You can check out their resources. They have plenty different options for you. Working capital, flex capital, contractor. I know a few of them because I do their marketing. I was just typing it up this week. But I do want to make sure that you are aware of this resource. And
we have a new partnership that we're going to unveil in November.
Okay, y'all, we the first ones. Listen,
it is with, if you've ever heard of it, you can look it up.
Okay.
Momentous Capital.
Okay.
Momentous Capital is huge. $1 billion in assets, and they're going to help us to create a product for those individuals wanting to purchase their commercial property. So it's going to be, if we can do it with the State Small Business Credit Initiative, which we are one of 6 CDFIs contracted with the state to deploy the State Small Business Credit Initiative funding. We can do 45% from Momentous, hopefully 45% through SSBCI, and 10% from the owner, or 5% if the owner can show sweat equity in renovations. And so we think that's going to be up to $1,250,000 on each side. So that's a commercial property could cost $2.5 million. Or and we're thinking that that is what we've seen that is needed to stabilize many of our businesses. They need to own their commercial property, because what happens if we have God forbid, another COVID, or if something happens and they're not able to access their commercial space because they were unaware that the owner of the building may have been in some financial troubles. And so we're really wanting to build those balance sheets and build those businesses that it can become legacy businesses, because you can't build without an asset, right? You can't build without looking at how you are strengthening. And if you know and understand your financial position from year to year, and that's what we're hoping we would do. And the first way to do it is through real estate.
All right, I'm going to ask a personal question, and then we're going to wrap this up. Now, you may not be able to answer this, but I'm taking the liberty since I got her here. So from the outside looking in, right, looking at how we are building our business. Now, I know we need to own our property, so that's I know that's one thing I need to work on. But what are some areas that you think, using me as for what you know thus far, as a template, what are some things you think, man, Corey, if you did this would take it to the next level?
I think owning your asset is one, but there is so much potential with your business and so much need in the community. If you could create some branding for nonprofits, and when I say branding, I'm talking about the whole suite of services. Like the annual reports. Doing that is huge. We're always looking for someone to take the data that we have from annually and create our annual reports, be able to tell our stories. And that's a a big market here that I think is void and can be filled by you. But I think you do a pretty good job of marketing yourself. And that's how we found you.
Yeah, that's true. That's true.
You know, but I think the marketing, but the services, I think you can expand. And maybe that will mean expanding your team, you know, to take on more work. But I do think you would be successful if you were able to do that.
Okay. All right. Yeah, those annual reports are a very big thing, especially if you do have a nonprofit, because that ensures funding, because funders are looking right at that to see how you see your numbers, to look at your data. So I definitely get that. Get that. All right. So listen, we are so grateful for Dr. Johnson joining us on the Live the Grace Life podcast. This episode, again, is a part of our business resource series, and we really wanted to make sure that we brought the GOAT in. She's been helping businesses in Southwest Georgia and beyond for over 20 years. She doesn't look like they're over. She said she started when she was 7, so 24, y'all add that number up. But we're so grateful. Any last words before we wrap up?
No, I just want to thank you for inviting me on to talk about Albany Community Together.
It's our pleasure. All right. Well, we'll see you on the next episode. Thank you all so much for joining us. We'll see you on the next episode. Thank you.